Hello, and welcome to Comprehensive Credit, the only credit score course you'll ever need. This course will cover everything you need to know about your credit score and how to improve it. In Episode 2, we will look at what credit scores are and how you can check yours. In Episode 3, we will explore important credit principles. Episodes 4 through 6 will cover all the factors that the major credit bureaus use to decide your score, as well as their scales and ranges. Episode 7 is the last main episode and will provide a summary of the course and a quiz to check how much you've learned. There will also be a bonus episode all about the US credit system. Who is this course for? This course is suitable for people of all knowledge levels. No matter if you're brand new to credit scores or quite familiar with them, there is something for you in this course. Most of the episodes focus on the UK credit system. However, the bonus episode will cover the US credit system in depth. Thank you for watching this short preview of our Comprehensive Credit course. If you would like to learn more about how the three major credit bureaus assign your score, please consider purchasing our course. Welcome to the second episode of Comprehensive Credit. In this episode, we will discuss what credit scores are and how you can check yours. What are credit scores? Credit scores are numbers assigned to you that represent your credit worthiness. Your credit score is based on your credit report, which contains information on how you've managed credit previously. Lenders use your credit score to help them decide whether you're eligible for credit products such as credit cards and loans. Credit scores are assigned to you by credit bureaus, which are also known as credit reference agencies. How do credit scores impact you? Almost all lenders will pull your credit report when you apply for a credit product with them. Your credit report contains information about your accounts, credit inquiries, and personal information such as electoral roll records. Lending criteria vary from one lender to another, but missed payments and the number of hard searches are considered significant by most lenders. If you have multiple factors working against you on your report, lenders may refuse your application, decrease the credit limit offered, or increase the interest rate. Some people believe having an average credit score is fine. However, there are some downsides. These include lower credit limits, higher interest rates, higher insurance premiums, difficulty renting, and missing out on valuable credit card rewards. Receiving a low credit limit means the credit product you have will be less useful. Higher interest rates should be avoided when it comes to credit cards and loans, as it means you will pay more for borrowing. In addition to that, having a lower credit score can lead to higher car insurance premiums and rental rejections. Finally, you may be missing out on credit card rewards such as cashback and bonus points. There are three main ways to check your Experian credit report. The first way is directly through Experian, which offers both a free service and a paid service. Using the free service, you will receive an updated partial report every 30 days. This report will include your credit score, however it won't include all the details of your accounts. Their paid service is called Credit Expert, and it costs $14.99 per month. When subscribed, you will receive an updated report every day, as well as some credit score guidance. The second way is using Credit Club, which is offered by Money Saving Expert. They provide an updated report every 30 days for free. The final way is using Check My File, which costs $14.99 per month. They offer a unique service that allows you to view information from multiple credit reference agencies, including Experian. One of the drawbacks of Check My File is that you can't view your score from each bureau. Instead, they provide a separate score using their own scoring system. There are multiple ways to check your Equifax credit report. The first way is directly through Equifax, which only offers a paid service. Using their paid service, which costs $7.95 per month, you will receive an updated credit report every day. The second way is using ClearScore, which is partnered with Equifax. ClearScore provides an updated report every 7 days for free. The final way is using Check My File, which costs $14.99 per month, and supports Equifax as well as Experian and TransUnion. There are three main ways to check your TransUnion credit report. The first way is directly through TransUnion. The service is free, however, they only provide a one-off report. The second way to check your TransUnion credit report is through Credit Karma. They provide you with an updated report every 7 days for free. The final way is using Check My File, which costs $14.99 per month and supports TransUnion as well as Experian and Equifax. That's all for episode 2 of Comprehensive Credit. In this episode, we learned what credit scores are, how they impact you, and how you can check your credit score. Join us in episode 3 to learn about general credit principles. Welcome to the third episode of Comprehensive Credit. In this episode, we will discuss general credit principles. Credit utilization is a measure of how much of your credit limit you've used. It can be calculated by taking how much credit you've used and dividing it by your credit limit. For example, spending £200 on a credit card with a £2,000 credit limit will result in 10% credit utilization. Having high credit utilization can be harmful to your score even if you pay off your balance every month. In general, you should keep your credit utilization under 30%. If you need to make a large purchase with your card, consider making payments before the statement date to bring down your balance. Having a higher credit limit is a double-edged sword. The main advantages are that it makes your card more useful and may improve your credit score by lowering credit utilization. The main disadvantages are that it allows you to take on debt more easily, and it can lead to large interest payments if you carry the card balance. An increased credit limit is beneficial as long as you keep your spending in check and make sure to always pay off the card in full. When you apply for a credit card or loan, the lender will pull your credit report to check whether you're eligible. This will be shown as a hard search on your report. Making too many applications in a short space of time is viewed negatively by lenders, as it can look like you're desperate for credit. For this reason, it's best to limit yourself to 2 applications every 6 months. If you plan to apply for a credit card or loan, try delaying it for a week to fully consider whether it's the right decision. Many lenders provide eligibility checkers that can tell you how likely you are to get approved. These checkers perform a soft search on your credit report, which does not impact your score. Missed payments can remain on your report for up to 6 years, during which time they have a massive negative effect on your credit score. Even having one missed payment on record can sink your chances of being approved for credit cards and loans. You should always make at least a minimum payment on all your debts. If you're struggling to make repayments, try contacting your lender. They can give you a payment holiday, which allows you to make the payment later, or make an alternative arrangement with you that avoids a missed payment being added to your credit report. Having too much debt can increase your credit utilization and lower your credit score. Lenders usually ask how much outstanding debt you have during the application process. High levels of debt can make you a high-risk borrower and less likely to be approved. It is important to monitor your total debt, as the more debt you have, the more likely it could spiral out of control. If you currently have a lot of debt, consider looking into the avalanche and snowball methods to pay it off. The avalanche method involves making the minimum payment on all debts and then using any money left over to pay off the highest interest rate debt. The snowball method also involves making the minimum payments on all debts, but uses extra funds to pay off the smallest debts first. That's all for episode 3 of Comprehensive Credit. In this episode, we covered some general credit principles that can improve your score. Join us in episode 4 for an in-depth look at how Experian assigns credit scores. Welcome to the 4th episode of Comprehensive Credit. In this episode, we will take an in-depth look at Experian and how they assign credit scores. Experian scores range from 0 to 999. They use 5 score ranges which go from very poor to excellent. People in higher score ranges benefit from higher approval rates, higher credit limits, and lower interest rates. In 2022, Experian found that the average UK credit score using this scale was 759. The exact breakdown of how Experian assigns scores in the UK is unknown. However, The way Experian assigns FICO scores in the US is known and can give us more insight. FICO scores use 5 main factors: payment history, credit usage, length of credit history, credit mix, and new credit. Payment history and credit usage are the most important factors. The payment history factor represents how well you've managed repayments in the past. The factor can be improved by consistently making on-time payments. Missed payments, late payments, and filing for bankruptcy all hurt this factor. The credit usage factor represents how much you owe and your credit utilization. The factor can be improved by having low credit utilization and low overall debt. The factor can be negatively affected by a high debt-to-income ratio and high credit utilization. As a general rule, try to keep credit utilization below 30%. The credit history length factor looks at the average age of your credit accounts as well as the oldest and newest. Borrowers with older accounts and longer credit histories will be viewed more favorably by lenders. The credit mix factor looks at the different types of credit account you have. The factor can be improved by having both installment accounts such as car loans or personal loans and revolving accounts such as credit cards. The new credit factor is dependent on how many credit applications you've made recently. To improve this factor, limit yourself to 2 credit applications in a 6-month period. Here are some of the other factors Experian used to decide your score. Direct debits can improve your credit score, as they show your ability to make regular payments on time. Exceeding your credit limit will damage your score even if the lender allows you to. Being on the electoral roll helps companies to confirm your identity and improves your credit score. If you're eligible to vote but not registered, consider applying for an easy boost to your score. Payday loans can become unmanageable easily and lower your credit score. Avoid them at all costs. Your Experian score isn't affected by these factors. Checking your credit score doesn't have any negative effects no matter how often you do it. Living with other people doesn't affect your score unless you're financially connected to them. Examples of financial connections include joint mortgages or accounts. Your credit report mainly contains information on the last 6 years. Credit events older than this won't affect your score in most cases. Soft checks can be used to see how likely you are to be approved. You can perform as many soft checks as you want without affecting your score. Experian Boost is a service that can help you increase your credit score for free. Activating Boost can only result in a score increase or your score staying the same. Experian will look at your bank transactions and categorize them. Your boost will be larger if you've made payments to savings accounts, investment accounts, or towards council tax. Digital entertainment payments and spending less than you earn will also result in a larger boost. Not all lenders use data from Experian Boost, meaning some offerings will stay the same. The best way to check your Experian report is using Credit Club, which offers a full updated report every month. You can also check your score with Experian directly. However, you will only receive partial credit reports. Using Experian's Credit Expert subscription is the best paid way to get your report. Credit Expert provides daily credit scores and reports, as well as guidance on how to improve your score. An alternative to Credit Expert is Check My File, which allows you to view data from multiple bureaus. That's all for episode 4 of Comprehensive Credit. In this episode, we looked at how Experian assigns scores. Join us in episode 5 for an in-depth look at how Equifax assigns credit scores. Welcome to the 5th episode of Comprehensive Credit. In this episode, we will take an in-depth look at Equifax and how they assign credit scores. Equifax's old scoring scale ranged from 0 to 700. They used 5 score ranges, which went from very poor to excellent. In 2018, which reported that the average UK credit score using this scale was 380. The current scoring scale that Equifax uses ranges from 0 to 1000. The scale is split into 5 score ranges, with the lowest being poor and the highest being excellent. In 2022, Equifax found that the average UK credit score using this scale was 585. Equifax doesn't reveal exactly how they assign credit scores. However, they use similar factors to the ones used by other credit bureaus. Equifax's highest impact factors include payment history, which looks at whether you've consistently made on-time payments, and credit utilization, which tracks how much of your credit limit you use. New credit and credit history length are also high impact factors. New credit looks at how many credit accounts you've opened recently, and the credit history length factor represents how long you've been using credit. Here are some of the other factors Equifax used to decide your score. Withdrawing cash using your credit card will decrease your Equifax score. Having bankruptcies or county court judgments on your report will massively decrease your score and your chances of getting approved for credit. Avoid it at all costs. Having settled accounts on your report is viewed positively by lenders as it helps to show you can make repayments on time. Buy now, pay later purchases will soon start appearing on your credit report. Try to avoid using buy now, pay later if you can. Your Equifax score isn't affected by these factors. Getting married will only affect your credit score if you have a financial connection to your spouse, such as a joint bank account. Your credit score won't be affected by salary increases or decreases. However, it may impact your chances of being approved for credit cards or loans. Getting denied for credit won't impact your score more than if you were accepted. Your score will only decrease because of the hard inquiry. When you're using a debit card, you're spending your own money and not borrowing, which means your credit score won't be affected. The best way to check your Equifax report is using ClearScore, which offers an updated report every week. You can also check your report for free with Equifax directly. However, it's only free for 30 days. The best paid way to check your report is with Equifax directly. Their service provides daily credit scores and reports, as well as identity protection tools. An alternative to using Equifax directly is using Check My File. That's all for episode 5 of Comprehensive Credit. In this episode, we looked at how Equifax assigns scores. Join us in episode 6 for an in-depth look at how TransUnion assigns credit scores. Welcome to the 6th episode of Comprehensive Credit. In this episode, we will take an in-depth look at TransUnion and how they assign credit scores. The TransUnion scoring scale ranges from 0 to 710. They use 5 score ranges, which go from very poor to excellent. TransUnion's highest impact factors include credit limit, which looks at how much you can currently borrow, payment history, which tracks whether you've missed payments on debt, credit utilization, which tracks how much of your credit limit you use, and electoral roll registration, which looks at whether you're registered to vote. Other factors used by TransUnion include new accounts, which tracks how many accounts you've opened recently, age of credit, and whether you have a mortgage. Additional factors used by TransUnion include judgments such as county court and high court judgments, bankruptcies, insolvencies, and associate links, which looks at the people you have a financial connection to. Judgments, bankruptcies, and insolvencies all negatively affect your credit score. The associate links factor can have a positive or negative effect depending on how good the other person's credit is. The best free way to check your TransUnion report is using Totally Money, which offers an updated report every day. An alternative to Totally Money is Credit Karma, which offers an updated report every week. You can also get a one-off free credit report from TransUnion directly. The only paid way to check your TransUnion report is using Check My File. That's all for episode 6 of Comprehensive Credit. In this episode, we looked at how TransUnion assigns scores. Join us in episode 7 for the course summary and quiz. Welcome to the 7th episode of Comprehensive Credit. This episode will contain a summary of the course and a quiz to check how much you've learned. If you want the best credit score, you should do the following things. Always make at least the minimum payment on debts. Keep your credit utilization under 25%. Register to vote if you're not already registered. Make sure your credit report is error-free. Improve your credit mix by having multiple types of credit account. And use soft searches before you apply for products. If you want the best credit score, these are the things you shouldn't do. Don't take on more debt that you can manage. Avoid exceeding your credit limit. Don't apply for many accounts in a short space of time. Make sure not to default on any debt. Avoid co-signing for untrustworthy people. And when you can, avoid carrying balances on your credit cards. For Experian, the best way to check your score is using Credit Club, and the best paid way is using Experian directly. For Equifax, the best free way to check your score is using ClearScore, and the best paid way is using Equifax directly. For TransUnion, the best free way to check your score is using Totally Money, and the best paid way is using Check My File. Different bureaus use different credit score scales. Experian's scale ranges from 0 to 999. Equifax's scale used to range from 0 to 700, but now ranges from 0 to 1000. And TransUnion's scale ranges from 0 to 710. Go through this checklist and keep note of how many questions you answer yes to. The more questions you can answer yes to on this slide, the better your credit score will be. If you answered no to 3 or more of the questions, think about the changes you could make so that you'll be able to answer yes to them. Welcome to the Comprehensive Credit Quiz. The quiz will contain 10 questions and you'll have 5 seconds after each question to decide your answer. Keep track of how many questions you get right to see how much you've learned. True or false? Your credit score will decrease if you check it too many times. False. Checking your credit score is considered a soft search. Soft searches have no effect on your credit score. You can check your score as often as you want. Which of the following credit utilization levels will result in the highest score for the factor? Is it 0%, 15%, 50%, or 95%? The correct answer is B. Lower credit utilization will usually result in a higher credit score. However, not using your card at all can result in your score dropping. Aim to keep your credit utilization between 1% and 25%. True or false? Someone who has never used credit before will have an easy time borrowing. False. Someone who has never used credit before won't have a credit report. This will make it harder for them to convince lenders that they're trustworthy. True or false? Having a poor credit score can make renting property difficult. True. If your score is poor, you are more likely to have applications rejected by landlords. True or false? If your credit score is considered excellent, you will never be turned down for credit. False. Each lender uses their own criteria to decide who to approve. Even if you have an excellent score, you can still get rejected for reasons such as low income. Even though you can be rejected, it won't happen often. True or false? Having a mortgage on your credit report can help improve your score. True. After the effects of the hard search wear off, having a mortgage will improve your score with some bureaus. However, it is important to remember that missing mortgage payments will result in your score decreasing substantially. True or false? A single missed payment won't drop your score that much if you have a long credit history. False. Missed payments will drop your score considerably no matter how long your credit history is. Even making the payment late is always better than missing the payment. True or false? Having an excellent credit score doesn't require you to be rich. True. People of all income levels can obtain an excellent credit score. Your income is not one of the factors used to calculate your score. What is the minimum length that bankruptcies stay on credit reports for? Is it 1 year, 3 years, 6 years, or 10 years? The correct answer is C. Bankruptcies stay on your report for at least 6 years. Whilst they are on your report, you will have a very difficult time getting any form of credit. Always avoid declaring bankruptcy at any cost. True or false? If your application is rejected, your credit score will decrease more than if you got accepted. False. The hard search from your application will have the same effect regardless of whether you were accepted or rejected. That's the end of the quiz. If you were tracking your score, check which of the following ranges you fall into. That's all for episode 7 of Comprehensive Credit. Join us in episode 8 to learn about the US credit system. Welcome to the 8th episode of Comprehensive Credit. This episode will cover the US credit system in depth. Approximately 90% of credit decisions made in the US use FICO scores. FICO scores were created in 1989 by Fair, Isaac & Company. There are multiple types of FICO credit score, including classic scores and industry-specific scores such as bank card score, auto score, and mortgage score. Not all US credit scores are FICO scores, however. Some are provided by VantageScore. The US has the same top 3 credit bureaus as the UK. These bureaus are Experian, Equifax, and TransUnion. FICO scores range from 300 to 850. They use 5 score ranges which go from very poor to excellent. In 2021, FICO found that the average score using this scale was 716. The payment history factor represents how well you've managed repayments in the past. The factor can be improved by consistently making on-time payments. Missed payments, late payments, and filing for bankruptcy all hurt this factor. The credit usage factor represents how much you owe and your credit utilization. The factor can be improved by having low credit utilization and low overall debt. The factor can be negatively affected by a high debt-to-income ratio and a high credit utilization. As a general rule, try to keep credit utilization below 30%. The credit history length factor looks at the average age of your credit accounts as well as the oldest and newest. Borrowers with older accounts and longer credit histories will be viewed more favorably by lenders. The credit mix factor looks at the different types of credit account you have. The factor can be improved by having both installment accounts, such as car loans or personal loans, and revolving accounts, such as credit cards. The new credit factor is dependent on how many credit applications you've made recently. To improve this factor, limit yourself to 2 credit applications in a 6-month period. The best free way to check your FICO score is through Experian directly. They offer an updated report every month. The best paid way to check your FICO score is using MyFICO. They offer basic, advanced, and premier packages which cost $19.95 per month, $29.95 per month, and $39.95 per month respectively. All packages give you access to your FICO scores, but only the advanced and premier packages give you reports from 3 bureaus. A free alternative to Experian is using the FICO Score Open Access program, which allows you to access your score through selected partners. These partners include Bank of America, Wells Fargo, and Barclaycard. A paid alternative to MyFICO is Experian's CreditWorks Premium Plan, which offers daily Experian reports as well as monthly Equifax and TransUnion reports. The best free way to check your Vantage score is using Credit Karma. They offer credit reports from Equifax and TransUnion updated weekly. A free alternative to Credit Karma is using one of VantageScore's partners that allow you to access your score. Their partners include Chase, American Express, and US Bank. While there are paid ways to check your Vantage score, most of the features they offer are provided by free solutions. How similar are the UK and US credit systems? The major credit bureaus in both countries are the same, with the top 3 being Experian, Equifax, and TransUnion. Credit score scales used in the US are quite similar to the ones used in the UK. Credit score factors and the ways to optimize them are much the same in the US and UK systems. The ways you can check your credit score are similar in both countries, with some companies offering solutions in both the US and UK. Overall, the 2 systems are quite similar, and knowledge about one system can usually be applied to the other. Congratulations on completing the Comprehensive Credit course. We hope you've enjoyed this course and learned how you can maximize your credit score.